did not hire any person, you don't need to apply for employer. Only if you hire somebody under you as your employee, and then you report, the paycheck, employment tax. Otherwise, you just use your Social Security number as EID. Understand?
So each 1099 you have EID.
Okay. Now, let me put it this way, okay? If you were the recipient of 1099 dash MISC, okay? There are so many 1099. If you were the recipient of 1099 dash MISC mean miscellaneous, then you must file Schedule C. Understood?
Yeah.
But it is not vice versa, okay? Even you do not receive 1099, but you receive the revenue or income from anybody else more than $700, I believe that's $700 per year, then you still need to file Schedule C. Understood? But to simplify, if anybody issue you 1099-MISC, then you don't have any option. You must file it, otherwise IRS will go after you. Because when the person issued 1099, one copy mailed to you, the other copy mailed to IRS. And again, supercomputer will link together very soon. And if somebody filed 1099 and filed to IRS, and the supercomputer will find out your Social Security, but will match your 1040 return, you did not attach Schedule C, and you got trouble. You will receive the letter for sure. Yeah. So that's how they check to each other. All right. Let's go ahead.
For this expense claim for the tax, right? So
yeah.
Usually the friend of mine told me if you do this type of business, right? So the better way you do is just get the CPA do it for you, right? The other one you can do yourself. But somehow I heard of a lot of scale on the boundary in terms of whether being audited by the IRS or not. So usually, what type of proceeding actually boundary? So
there's no boundary, okay? Because let me tell you what, okay? It is the top secret. It is one of the top secret for IRS. What is the formula or factors for IRS to go out to check on you? Nobody knows it. Even for those people they work for more than 30 years, 50 years with IRS, they don't know what's the formula. There's no formula. But no, I should change that. There is formula, but nobody knows it what's formula. So if anybody tell you, oh, don't do this because this is gonna trigger, IRS come to see you. No, this is totally BS. This is not true. But I can give you the guideline. You know what? If I said the part 2, if I say ordinary, necessary, and then IRS meaning, IRS really mean it, okay? If the magic word is ordinary, necessary, then it is. So when you do anything here, from number 8 to number 27, when you enter into any number, and the moment you feel not right, you question yourself, it is necessary. Say for example, in order to get into your potential business, you invite your potential client with you, go with you, have a cruise. Have a cruise and you spend $2,000. And you enter in this number. I bet you, okay, when you enter this number, you already ask yourself, is this necessary? Then if you already question yourself, I bet IRS gonna question you also. Right? So there's no boundary. There's no boundary. If you can provide any legitimate number there, then even you have a $1 income, you have 10,000 expenses, you stand on your ground. You stand very firm. Don't worry about that. But when you enter this number, you already question yourself, then don't do it. This is my suggestion. Okay, you read questions, same thing. IRS well questions.
And also for the equipment stuff, right, that you purchase. So usually.
Equipment, that's big issue, right?
Yeah, so that one is only can, every year you only can claim about the percentage
Yes,
of that,
yes.
right?
We will talk about this. If you are going to take my taxation in January, so I already try to promote myself. Okay. There's one class we're gonna talk about depreciation. This is good point, okay? Because this is big thing here. You see? Depreciation. Another is depreciation. Oh, yeah, number 13. This is big issue, okay? Especially very famous section 179. This very famous section. They really mean for small business, and there is a definition of a small business. Usually your revenue under $1 million, okay? If you qualify as a small business, I think they increase the number every year. I cannot remember what's the number. Under a certain amount, purchase equipment, you can write it off in one time. You don't need to wait. But there's exception. Automobile, you cannot write it off in one time. But for R&D equipment, for usually for copy machine, for computer, software, usually you can write out in one time, so you don't wait. But we just we leave that to our taxation class. I don't want to spend too much time. There's another hands up, please.
Yeah, I don't know whether people have the experience about it. I had that once.
Okay, I have one too. Everybody will share your experience.
Yeah.
It's a headache, it's not fun. It's
The
not
reason
fun.
for it gets audited are two. One is that if you got too much transactions in your bank, and then the total amount doesn't match the income reported in W-2, they will audit you. They will try to ask you to explain why do you have that much of a.
Say for example, you have money coming in, coming out for the whole year, and the total coming out amount, say $1 million, and then your W-2 income is 200,000, and the IRS may come in and say, is this money laundering or something else? Maybe.
Yeah. And the second one is that if you report anything in inventories, and
It's
it's
another
not
big
match.
issue.
Yeah.
That is, the inventory is always big headache. So that's why I recommend you for your business, okay, because we are talking about the real case, right? For your business, try to stay away from retailer. Retailer, try to stay away. It's unless you don't have any other choice. All right, this is your last choice. Try to stay away. But well, our society we need that, right? So if you really go for it, But if you can have any other choice, stay away from any inventory type of business. No fun. By the end of every month, you know what? You need to count it. You need to count the inventory, just like a bookcase here. If you are in the bookstore business, every month you count it. See how many is still there. No fun, okay? So try to stay away, right? So any more questions about? Yes, go ahead.
Talking about 1099.
Okay.
So if you have rental properties.
No, this is nothing. This is not Schedule C. This is Schedule E.
Yeah, I'm just talking about in general 1099.
Okay.
So if you have rental properties at the end of the year, so you hire people to work on the house, like renovation or repair. And at the end of the year,
you issue 1099 to that person, receive your compensation.
You do.
But only more than $700 per year.
Okay.
If not, then you still can report as expenses here. Okay, but you don't need to issue 1099 to that person. You understood?
I see.
Yeah. Any more questions for sole proprietorship?
Yes.
We can spend more time because I think this is more popular. I think for your business, if you just want to try it out, then don't go for corporation. Don't do it, okay? Yes, go ahead.
So to continue Kenny's question about this rental property, you're going to explain the LLC, right?
I'm going to.
And is that can we link those two?
Yeah, I will discuss LLC eventually very soon. and you can present your case if you want to. We can discuss that. Oh, by the way, we only have 2 left. Okay, for November 3rd, we will have an in-class 30 minutes quiz. Very simple one. Okay, if you cannot attend November 3rd, you let me know. I will email you the midterm quiz questions, and then you promise me you will not share this question to anybody else. Then same thing, you send it back. You need to tell me when do you start it. Give me the day and time, because everybody will be equal. You have 30 minutes to do it. I just trust you. You will honor it. Okay. The time you start it, and you don't send it back later than everybody at the same time. It's 5:30 p.m. on the same day. You just email back to me. And then after that, we'll have the last one. And for December, even though we finish our class, however, I will be here. I will be here. So if you want to come in to ask me any questions, you're welcome. And then I should write it down our final project, right? The deadline for the. Do you have any other final project you need to turn in? I do not want to have a very complete schedule. I don't want to compete with any other professor and try to reduce. So say, for example, I have this Sunday as the last deadline for you. Do I compete with any other professor? I try to give you more time. So is this reasonable for you? December 9th, Sunday, and the 6th p.m. you send your email to me. So even though, so for December, I will be here on the 1st and the 8th. I'm sorry. Yeah, I'm right. Yeah. Even though we don't have a class for this, so I will be here. Okay. The 1st and the 8th of December from 12 to 3. So in case you're also in school and you want to ask me any questions, I'll be here. Okay. But the last project eventually, that is the one we talk about right now, right here. Okay. For every week we have a other than today, we have another 2 sections. We're gonna talk about your final project, all right? So you can focus on any section. Say you just want to talk about the business organization. You just tell me within the 15 minutes why sole proprietorship is the best for you, and what kind of tax concern you may have, right? Or you talk about capital issue. You talk about business model. Right, you just want to talk about what is business model it is, or you want to talk about, and for this one, very last one, we will talk about contract. All of different kinds of contract you may use, we're gonna talk about, and I may be able to provide you some sample. Okay, say for example, Maria, you want to sign off any, say, service agreement with your client. When the people come in to interview with you and they're happy, they're satisfied. And then say, sign me off. You need to give something, right? And to define the day, the event, and the length of the service, and how much you charge. It's by hour or per package, right? Then you have your client sign off and give a deposit. Then this is it. This is it. Right? Hopefully, for this semester, after this class, as I said, you don't come in this afternoon just for nothing. You want to come in to get something. Hopefully you can use it. That is my goal. You can use it. Okay. So far any questions for sole proprietorship, Miss Maria?
Oh, it's something to do with the 11/3 when we show up for the 30 minutes. I mean, is it going to be after the class?
After. I expect it's from 5 to 5:30. I will have my lecture ended by 5, or even 10 minutes before 5, and then you started your 30 minutes at 5, and then you finish it by 5:30. it shouldn't be very tough. It should be very, very fun. Hope so.
And it's going to be an open
Always.
book, right?
No more homework. No more homework.
No, open book.
Open book, open everything. Just don't open mouth. Just no sharing. Just don't share it. Don't ask, don't tell. Okay. Just like who said it, right? Don't ask, don't tell. Right? So just by yourself. Okay. Okay. So we go to ALC. ALC eventually is under the traditional partnership category, but for the liability issue, more and more people, even though it is partnership, however, they switch to ALC. The problem for partnership is if any liability arises from, then each partner will be liable for it, responsible for it, unlimited. Unlimited means the person can go after all of the assets this person has. So for the liability issue, more and more partnership type business switch to ALC. Before I go to ALC, I will tell you what is the benefit as the partnership. Okay? The main benefit as for the partnership is for tax issue. Because partnership by itself does not pay for federal income tax. Say for example, ABC 3% organize one business, and by the end of the year, this partnership closed the book and found out total revenue is 90,000 net profit, for example, and divided, say for example, equally by 3, so each person earned $30,000 income. So you know, at partnership level, there is no tax paid for 90,000. No. Okay. Each partner individually pay for their $30,000 income tax. Of course, maybe each person based on different tax rate, but at least we know, at partnership level, there is no partnership income tax. Same thing happened to LLC. Same thing. Okay, same rule, same principle happened to LLC. So far you understand, if you organize LLC, you do not increase your income tax liability. Another benefit, if any dispute, any litigation arise from LLC business, each partner, right now we changed the name, it's not called partner, it's called member. Each member will not be reliable for it. LLC really means limited liability company. So each member only be liable to whatsoever this member contribute to, more like a corporation. So for example, Mr. A contribute $50,000 into LLC, and his total liability, this is it. The worst case is the LLC, dissolved, close the door, dissolved, and $50,000 all gone, then this is it. So each creditor of LLC can only go after whatsoever the assets under LLC. This is it. I just assuming everything is legitimate, no any fraud. Okay. If there is a fraud, this is a totally different scenario. But I just talking about everything is black and white. Okay. It's very, very transparent and everything is legitimate. So this is the benefit of LLC. And in today's life, LLC become more and more popular, even more popular than corporation. Right? But there's a problem for LLC. if your business is considered, okay, to go IPO, the LLC is not very good, because I don't see LLC IPO. The reason why is there's no stock. Okay. If you want to go IPO, then you just file the regular corporation, because corporation issues stock. LLC usually only issues certificate, okay, to prove how much percentage interest you own, okay, in this LLC. Okay. And right now, people use LLC usually to run real estate. Say for example, this person invests a few, could be single family home, could be condominium, could be apartment, could be duplex, multiple units, and very, very popular. We use LLC. We organize, we set out LLC to hold the title. And number one, couple reasons for that. Number one, to limit your liability. If any lawsuit really arises, the person gonna file the lawsuit against LLC, not to you. This is number one reason. Number two, if in the future you want to change the ownership, say A sold to B, you may just change the membership, right? But in the county, you do not change the title. You don't change the name of title. So you will not trigger, number one, property. Hopefully, you will not trigger the property tax being reassessed. And you avoid transfer tax, such kind of thing. A lot of reasons. Okay. But the drawback is, if you change the title from personal to LLC, then you may not be qualified to get a refinance anymore. So if you have cash paid for the property, there's no problem. However, if you consider to get a refinance, because you know right now the market rate is record low right now. For some people, they try to get a refinance every other 3 months, you lose such benefit. But you know, eventually I told another student, say, if you are the people like opinion in dining, you know, you are not the person for LLC. You are not the nickel and the dime person, okay? If you every day you still count the $100 saving, you are not an LLC person. So you know, if you don't worry about the refinance issue, then LLC is always the best. Oh, by the way, this is another minor issue. If you put your real estate property into the LLC, by the time you sold it, you avoid the tax withholding issue. Otherwise, if the property is under your individual, and California state will hold 3.3%. It's not big money, but it's inconvenience. So this is the LLC. So right now, open out to your questions.
It seems like the LLC has single or
could be single member.
single member.
Yeah, could be. If you really want to protect your personal liability, could be only one member.
So when you do that, for example, if that's in California, it's joint.
So community property.
Community park. Then can you form a single member LLC and hold the property
Without your spouse?
without?
Yes, but your spouse must sign the document to agree, and this is your only, without the quit. Even you are the name on the LLC, your spouse still take 50%. So do I answer your questions? The answer is yes. In the California is a community property state. That means, you know, each spouse takes 50%, right? However, to answer Steve's questions, legally, you can have only one spouse to form one LLC and let that person to take 100% interest of this LLC. However, the other spouse must sign a document say, I agree, I waive, I forgive, whatsoever, I quit. Whatever I am supposed to get, I'm entitled, but I just quit it. Without that agreement, the spouse name even not under the document of the LLC, still take 50%. Still own 50%. So do I answer your questions?
Yeah. So the second question is, so if you try to transfer from your personal to the LLC, is that a quick thing or?
No, this is a very, very special. Okay, I believe we have the same situation here. Because right now LLC is so popular to hold the real estate title. So I see so many cases. People form LLC, then transfer the real estate property. It was under the individual name, transferred to LLC. This is very, very common. However, you must be very, very careful. Okay, I don't try to promote myself, but at least you need to find any lawyer to consult this. Because under the current law, when people transfer from your individual to your LLC, you can waive property tax. However, if you done this wrongly, then your property tax will be reassessed and increase a lot. That is very, very, very critical. So there are two steps. Step one, you form LLC. After that, you transfer your real estate property from your individual to the LLC, then both. However, you must be very careful. There is law qualify you to waive, to avoid the property tax being reassessed.
So should we seek qualified personnel to handle this, or?
Yes, real estate lawyer. Yeah. I don't mean to promote myself. Yeah. I'm one of those. Yes. Yeah, you should do that.
So can title company handle this kind
They
of
don't do
issue?
that. Because there's a practice of law, they say no, we cannot do that. You need to ask your lawyer.
So what do you choose LLP versus LLC?
Yes, okay. Good questions. What's the difference between LLP to LLC? Okay. The full name of LLP is a limited liability partnership. Alright? Limited liability partnership. By the way,
So tax ID is your social security?
no, not really that.
Always.
Let me explain to you, okay? There are 4 different types of partnership. There are 4 different types of partnership. Regular partnership is just a partnership, okay? You don't need to file any certificate with the state government. At most, your people just go to county center. You get a business fictitious name. You don't need to file any registration. You just say, okay, we are partnership, and you have the partnership agreement. This is it. That is traditional partnership. But the problem is, as I said, each partner will be unlimited, be responsible for everything. Right? This is not good. You don't want to be that. Okay? The second type is called LP. Okay? LP means limited partnership. It is not very popular. I sold it once or twice. Limited partnership means there is one person, or at least one person, or at least one partner is general partner. 1 or 2 or 3, but must be at least 1. And that person could be natural person, or could be any other type business. And this person will be unlimited responsible for this LP. And the other person becomes the limit partnership, and whatever this person contribute, this is it. So this is called LP. And the third one is called LLP. That means there's no anyone is general partner. Each person coming in is limited liability partner. Okay, then you need to file registration with the state. However, in California, okay, not across the board, okay, not across the United States. In California, only certain profession can use ALP, like a law firm. So you only see the CPA firm, architect firm, law firm, they're under the ALP. Nothing else. So regular people, you cannot use ALP.
The Department of Technical Services.
Yes, could be. But only if you need the license. I don't know, if you require a civil engineer license, if this kind of business does not require the license, you cannot use ALP. You just use LLC.
Can you deduct more taxes if you hold the property titles under ILC?
No, you deduct same tax. You deduct same thing. You have nothing to lose. Right? You have nothing to lose. So for your liability reason or for investment, especially for investment, you don't want to keep the title under your personal. Too risky. All right? You better off set out the LLC and transfer to LLC.